The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Well, welcome to the COB on this Monday afternoon. It's a pleasure to be here with you. I'm Nadine Blaney.
And I'm Danny Akuye.
Danny, not the best way to start this week.
No, a bit of a sad face. We're not looking green on screen. In fact, we're rather red on screen today. There we go. SIBO 200 off almost 10 points or 0.7%. And the ASX 200 looking very similar, also off 0.7% or 51 points, around 7,227. So not the way we like to start the week, but
No.
hey, it's only the start of the week.
Yeah, the start of a very big week, and that's in keeping with our three themes. You know, we're keeping a very close eye on China, particularly what's going on in the property space. And we'll be chatting with our special guest about that in a little while. You're going to want to stick around to find out who it is. Yeah, you know, we've got the rates looming large.
Yeah.
And it's not just the FOMC, it's the BOE, it's the BOJ.
Exactly. It's a really, really big week, and these bond yields are on the move at the moment. And, you know, just a reminder that when the mighty bond market starts to push those yields up, it's never, ever really good for asset classes. And of course, that goes to our theme, Aussie Tech.
Yeah.
It's, you know, tech's longer dated assets, very, very sensitive to these high yields, although they did have quite a weak lead from NASDAQ on Friday.
Absolutely. And I think it's the worst day in 3 weeks for the local tech sector. So we did chat with the likes of Harry Watt from Market Matters and Schwartz Partners earlier, and he gave us a couple tech names that he'd be selling and one that he'd be buying. You can find that interview up online if you're interested. Here's a look at the tech index. Do we have it?
There we go. And so
exactly.
So really it looks like Xero is taking the full brunt of the selling today, off almost 4%. Wisetech Global off about 2.2, Altium similar, and Technology One, now they're probably coming up to their reporting at some point over the next month or so, because they report out of cycle from memory, and block off about 1.5%. So energy sector, let's have a look. And interesting to see, despite the fact that we've got Brent crude at US $94 a barrel. And I was chatting today with Clyde Russell from Reuters, and he made the point that there are other, because it's not all just Brent crude, there are other crudes out there, and some of them are already over US $100 a barrel. But in spite of that, we've got profit taking across the board there in the energy sector. And I can't remember, is that stake from Vitol selling Viva Energy? Have they got away?
Last week.
That's gone, but nevertheless, it's still weak there.
I thought it was also interesting to note that we've got Chevron saying that full production has resumed at its strike-hit Wheatstone liquefied and LNG facility in Western Australia. So a fault last week cut production by about a fifth. You know, it's interesting, you just overlay that with the strikes that have been set to run until the end of the month. You know, there's still, the unions at least are flagging their intention to extend the industrial action. So lots happening in that space.
Absolutely.
But petrol, you had to fill up your car recently.
No, because I drive a hybrid and have done for years.
Well, there you go, Danny.
So I try, I don't drive very much, and because it's a hybrid, I don't fill up very
You're
much.
ahead of the game.
So let's have a look at consumer discretionary. Harvey Norman off by 1.1%. Wes Farmers almost 1%, ditto for Aristocrat, and JB Hi-Fi. Again, probably no surprises, although not as bad as the tech sector. And there we go on the industrials. Computer share is still sitting in there.
Okay, I'm making a note. I'm going to fix that tomorrow. All right.
But it, just interesting that really Seven Group and Worley, which have been quite popular in terms of a lot of the experts talking about, particularly Seven Group, what a great outlook that they had, but they're taking the brunt of the selling pressure there. And there's a bit of corporate news as well, isn't there?
Well, this morning began with a bit of news from Synlait and A2 Milk Company. So they have gone their separate ways. A2 Milk shares still down by 1.3%, but Synlait Milk hit a record low, so it canceled those exclusive rights. It said that Synlay's delivery performance in fiscal 2023 was below the required level for it to maintain such rights. So we did speak with Brad Gordon from Hobson Wealth in New Zealand this morning, who gave a bit of a view on that one. And then Costa Group.
Yeah, that private equity company. So they've reduced the price for the buyout there for the remaining shares, about 85%. I think it's gone down to $2. No, I can't remember off the top of my head. Apologies. We'll find out in a second. But they have reduced it, and the shares appropriately were off about 5% today.
Yeah, $3.20 per share as opposed to $3.50 a piece that was made in July. So that's not good. And guess what? It was the stock of the day. Let's listen to what our expert guests had to say.
See the price reduced, but they are still interested in buying the business. They've currently got just shy of 15%. Our valuation on the stock without the bid is $3.10. Prior, when the previous bid was at $3.50, we had a valuation of about $3.40. So our analyst had attributed about a 75% chance of that bid going through. After today's announcement, I suggest that they might be having another look at that number, and perhaps the valuation comes down to closer to our $3.10 or even that $3.20 sort of figure. But we've got a hold on it. So if you've currently got stock in it, I'd be holding
this. So we typically don't really like to venture in to the agricultural space too much. There's always difficulties there, and if you're in the stock now, you're probably not happy with the revised offer. Doesn't look like there is much of a premium at all, so you'd rather kind of wait it out, because it's obviously one of the better positioned asset bases out there for its sector. And over time you'd expect the cyclical factors to change and the stock to benefit. So you'd probably be waiting in there, and at this kind of revised lower offer, you probably wouldn't be too happy with an acceptance, I think.
Yeah, so that was, not a ringing endorsement of Costa Group. They are very cyclical, very at the whims of, Mother Nature, pricing, everything else. If you'd like to watch that episode, Koshi was back in the seat. So that's up online as we speak, also available in podcast form. Danny, I think I'll give you the pleasure of introducing our next guest.
Oh, well, welcome to the COB, Carl Rodda.
Should we say welcome back to the COB?
From capital.com. Hey, Kyle, lovely to see you on the other side.
Oh, it's lovely to see you too. I have to say, I'd prefer to be talking in the flesh with you, of course, as always, but this will have to do.
Hey, well, you're welcome anytime. So let's get to business, shall we? Asian stocks really suffering to start this week, but it could have been worse if you look at Chinese shares.
Yeah, it was an interesting little sell-off that we saw at the start of the day's trade. I don't know how much of that was to do with that kind of knee-jerk response to the Evergrande news that we got, that I think it's 3 or 4 employees of their wealth management division have basically been arrested for reasons that I can't quite ascertain myself, at least in the public news flow. So we did see a little bit of a bounce back in Chinese equities, but it was a fairly thin day's trade. It had to be said. We had the Bank of Japan. We had Japan offline for I believe it's Respect for the Elderly Day today, actually. So we didn't have too much going on in terms of cash treasuries in the US, and if you did sort of, I suppose, wander around Twitter early in the session, there was a technical glitch in the 2-year yield, which saw it jump up to about 5.3%. And you had the typical doomsdayers coming out prognosticating that this would be the week that the world ends 15 years on from Lehman's. But overall, I mean, we just sort of saw a really thinly traded market. And of course, as you said off the top, Danny, the second you see yields move higher and higher right across the curve, and a fairly significant bear steepening, you can pretty much write the day off for equities more often than not. So a lot of positioning as well, one would imagine, going into this week. We're going to be very, very keenly watching the dozen central banks, not to mention sort of 3 of the biggest, handing down policy this week.
Absolutely, Kyle. It is so there was a technical glitch, was there, with the US 2-year? That's why it was at the Aussie that you were talking about.
No, it was from what I understand, it was a data feed. So basically, treasuries weren't trading in Japan today, or were very thinly traded in Japan if they even started trading today at all because of this public holiday. So everyone was running around, very, very frantic as if something had actually happened in the market. But as I understand it, what I could get to the bottom of was actually there was a data feed that went wrong somewhere. The 2-year was reading that it was at 5.3%, which would have been a 30 basis point move in the matter of moments. And I can tell you, if that would have happened, everything else would not have been as calm as it actually was. There would have been total panic because the 2-year yield is probably the most important price in the world at the moment because it's really just a reflection, obviously, of Fed rate expectations. So, as I understand, it was a data feed. Keep calm, carry on. Although, everyone says that September is the time for crazy things to happen. We've still got 2 weeks left of that, but that it could occur. But fortunately enough, it wasn't today.
Yeah, I was on Twitter around the same time, probably following or having some of the same people pop up in my Twitter feed as you, Kyle. And look, could have easily got carried away with what was going on there.
Someone with fat fingers. I was going to ask, the FT did an article which has been picked up in another news feed. They did a survey, Kyle, of 40 economists, and basically 60% of them reckon the Fed's going to go again, once, if not twice. Now that you've got your feet under the desk, are you getting any feelings around whether or not the Fed is going to hike again? Or that's why maybe this meeting is so important, because they might throw out a couple of crumbs for the market?
I'll give you 3 things there and there's one thing that I was thinking the other day about you, Danny, because we often joke about how I don't have much of a life and I spend a lot of time just looking at different parts of the rates curve. But 2 things, this meeting obviously this week is going to be important as to whether it flags or the Fed flags it will hike again before the end of the year. September's kind of taken off the table, but we get the dot plots, obviously. Markets are pricing in. We'll call it a 45% chance that there's another hike coming from the Fed. So that's going to be important. But I think the key conversation in markets at the moment is this concept that a lot of people are having to relearn because we haven't had to speak about it for 15 years. And for me, as youthful as I am, have never had to speak about it at all, is the trough rate, which is effectively not only where the rate gets for US interest rates after the next cutting cycle, which gives you a bit of indicator of where neutral rates are in the United States. Now that trough rate has been rising by about 100 basis points over the last 6 weeks or so. So what you're seeing, this is also being manifested around the belly of the curve, that markets are pricing in these higher for longer dynamics and expectations are really starting to feed in now that, maybe the Fed as well has another 25 basis points in it and keeps rates higher for longer. The other interesting dynamic, and this is where, again, I was thinking of you, Danny, if you do look at interest rate settings and if you do look at the curve typically when it starts to signal monetary policy is tight, it is, of course, when the federal funds rate gets above the 2-year yield, which suggests that policy is sufficiently restrictive, everything's going to start to slow down. But you don't start to see things really crunch until that spread gets to around about 100 basis points, which is where the 2008 crash occurred, the dot-com crash saw a recession shortly afterwards when that happened, and also in the early 90s, if not late 80s. We haven't got to that level yet, which suggests that maybe there could be more tweaking to go, especially if you're of the opinion that really the Fed does need to break something to actually get inflation down sustainably. So those are the few things that we're going to be looking at. But for the time being, that changing expectations about further rate hikes is definitely being, slowly priced into the market.
Well, Danny, on your mind with all of that, I can assure you they actually are more fun than that might make it seem. She's a riot, actually. Okay, so what happens then? So we've got RBA minutes here tomorrow. Bullock is now RBA governor. Are we just marking time until this FOMC meeting? Because it does seem to be, fully baked in that there's not going to be a move happening at this meeting. Different story for the BOE. But do you think that there's just going to be a bit of trepidation so far as, investors really wanting to take on a lot of risk?
The next few days, without a doubt, I think the Aussie might be expressing that reasonably well as well. It didn't move much today in the bond market dynamics, which says to me, again, that none of that was to do with monetary policy expectations or anything fundamental to the economy, some sort of technical thing we can sort of just move on from for today. But we're going to deal with these numerous cross currents, and it'd be probably worth mentioning too, although policy isn't expected to be changed, the PBOC meets on Wednesday as well to discuss loan prime rates, 1 year and 5 year, which again expected to remain unchanged at 4.05, 4.05, 4.2% respectively. It's still really influential because if there's anything at the start of the week that's been really significant, of course, is effectively what's going on in China. Once again, we had the CSI 300 touching year-to-date lows very briefly before bouncing. So yes, I mean, the Fed's going to be the biggest thing, and the biggest thing from the Fed is checking on the dot plots, seeing what the Fed says about potential further moves for interest rate hikes, as we've already mentioned. But we chuck in the China story. We've got the Bank of England, the Bank of Japan at the end of the week, and then we've also got another half a dozen central banks meeting as well, including the Riksbank and the Norges Bank as well. So the point of that is that markets are going to be dealing with all of these cross currents in the space of 3 days or so, as well as a few data points out of the UK, which means that, although it might end up being just a little bit of a blip, once all things are said and done, it's going to be a lot of moving parts as investors try and digest all the little individual parts of this story over the next 3 or 4 days. So for me, it says that there might be a little bit of a risk aversion coming through. Again, the Aussie dollar for me might be a bit of an expression of that over the last couple of days, and it's just going to be a matter of trying to digest this the best we can as we really just get flooded with this data and information.
Kyle, in all your readings on the weekend, anything about oil? Because US Brent is back up to $94, and I was chatting to Clyde at Reuters saying some other benchmarks are actually over $100. I mean, it's just interesting. I mean, it's not necessarily great, but anything that you've come across?
Well, I suppose the benefit of being back in, a dealing room is just getting some of the voices over your shoulder of what's going on in the oil markets. And obviously, we know the narrative, especially last week, of this incredible deficit that's looming in terms of global energy supply, or at least as OPEC is forecasting it, the largest it's been in about 15 years, if that does come to fruition in Q4. But we're starting to see a bit of a sort of a steepening in the curve there. So going into a fairly significant contango there, and sort of potentially expressing two things. One, that there is this supply deficit that's going to be building right across energy markets across the globe too. There's also maybe as well some seasonal factors starting to play into things, because although we had quite a mild summer down here and quite a temperate winter in Europe last year, that maybe there's some concerns that the weather might be so friendly to us come the northern hemisphere winter, as well as the southern hemisphere summer. So yeah, it looks like really we're starting to see along those sort of futures curve, the market's really pricing in that the prices could really ramp up into the end of the year. And of course, it's one of the reasons why we're starting to see yields run up at the back end too, because, well, we're discounting the risk of further inflationary pressures and much stickier inflationary pressures as well.
All right, Kyle, we'll let you get back to your dealing room. Sounds like you're loving it. We still favor the newsroom, but you're welcome back anytime. Hey, have a good one. We'll speak throughout the week.
Bye, Kyle.
Thanks,
Let's get across some of these market leaders on this Monday afternoon. And now that the curtains have come down on the S&P ASX 200, we can tell you
Paladin, again, that uranium trade.
Yeah.
I think Semico, or whatever it's called over in the States, is having a few problems. And it's a producer, so really interesting to see that the money just continuing to move into that stock.
Yeah, I think prices were up about 20% just recently, so watch that space. Data 3, it's not on this list here, but it's actually up by 1.7% on no news. That has me scratching my head, actually. Illumina as well, Illumina up by 1.7%. I have not looked at the price of aluminium, but interesting that one as well. Bapcor on the list, it's out with its 2023 annual report. We'll have to give that a read to see what they're saying about the outlook going forward. It's one of those companies that, lots of love coming from at least some of the investment analysts that I speak with, just because of its resilience even in the face of a consumer slowdown.
Yeah, and looking at the HomeCo daily needs rate. Now, I know you have a regular guest whose name is Rudy Philippek van Dijk, and he has been liking that stock. So that one is going up. I think he also owns it. And Auckland International Airport up to $7.20. So that's interesting, up to 1.34% today.
All right, let's get to some of the laggards. And Silver Lake is the worst performer. It's acquired about 383 million shares in Red 5. So that's about an 11% stake in that gold producer. It says that it's a strategic investment, but I can't say that the market is loving it. We've got Silver Lake down by 8.3%. Otherwise, Costa Group is one of the worst performers here. That's, as we mentioned, the Paine Schwartz has cut its takeover offer to $1.49 billion.
Yeah, indeed. And I was just having a look, nothing on Imaging that I can find out there. Actually, there seems to be a bit of a discrepancy in terms of what my screen is showing with some of these. BrainChip, which can be very volatile, also off by about 8%. And also Lake Resources and Xero Resources, now both of them very, very volatile and off, excuse me, around 7%. So yeah, quite a bit of profit taking there in some of those smaller companies.
Yeah, all right. Some of the small to mid-cap space. Let's just see what our feed's bringing us here. 4DS Memory made some changes. I do believe, now I don't want to misquote myself, I knew it earlier on. Just let me make sure I'm right, but I think there was some changes to its leadership. PYC Therapeutics, I didn't see the news associated with that. It's up by 12.5%. And on the laggards for some of these small to mid-cap companies, we've got Big Tin Can. So last week updated the market on Friday about its quarter, and it did have a really good day, but off by 12% today.
So much volatility in those small caps. Now, anything happening over tonight?
It's been quite quiet.
Yes, indeed. We've got that US NAHB Housing Market Index for September. Lots of talk around US housing at the moment because those mortgage rates have hiked back up again to 7.5%, which is really high. UK September's Rightmove house prices, again more on house prices, and Canada housing starts.
Yeah.
It's a housing kind of evening.
Just, I guess it is now that you pointed out. But yeah, reading that the house prices in the UK likely contracted. Again, rising rates, diminishing affordability, and we've got that BOE expectation to hike by 25 basis point. Wages, really strong, inflation strong in the UK, even though other parts of its economy continue to suffer. Tomorrow, we've got RBA meeting minutes here locally.
Maybe not too many surprises, I would have thought. That's really, new governor, Michelle Bullock, who took charge today. But these meeting minutes are obviously in the past. Eurozone August CPI as well as US August housing starts. That'll be obviously tomorrow night.
Yeah, but again, you just kind of feel like we're marking time until we get some of the big ones later on in the week. Look, tomorrow, like today, some companies trading ex-dividend. There's a lot of companies trading ex-div tomorrow, but no other really big corporate stuff on the horizon that I can see.
May have reported this afternoon after the close. Let's have a look.
Okay.
No, they haven't yet. They were due to report today. I've read that in a couple of places, but no, nothing there. No, sorry.
Okay. Well, we'll keep our eye on that one.
Shall we check in and see how the markets have closed? So there's the ASX 200. Well, let's start with the SIBO 200. There we go, down 0.7% or 10 points. Looking pretty similar for the ASX 200. It's off 48 points to 7,230 or 0.67%.
So in the lead up to the US session, I just thought it was interesting seeing something coming across my screen on Reuters that BlueScope Steel, its share price was down today quite significantly, at one point as much as 3.7%. They're tracing that back actually to those United Auto Workers strikes in the United States, just saying that it could affect the company's US-based North Star bottom line. That's coming from Citi. So that's one to watch because, we haven't talked about it a lot today, but that is a pretty historic move being made in the States by the auto workers. And, it's sort of sign of the times, you've got to
It
say
is,
as well.
and it's been a very long time since we've really had such big strikes, or the risk, the threats of them.
Yeah.
And I'm sure those analogies to the 1970s will start popping up. Dare I say again, between oil prices and strikes.
Well, let's call it a day, shall
Yes,
we? Okay.
indeed.
And we'll see what tonight brings, and we look forward to getting you through all the detail in the morning. Thanks for listening or watching. We'll see you tomorrow.
Bye.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.